Hello everybody, it is Dawn Patrick here, your local Lancaster PA real estate agent, and it's Tuesday, so it is the Tuesday 2-minute tip. Today's 2-minute tip, I want to talk about the capital gains tax that you may or may not have to pay on your personal residence when you sell it. Now, more than likely you will not have to pay this capital gains tax, but it is always a good idea to check when you are selling your property, because depending on how much the house you bought for and how much you're selling it for, it might have a lot to do with the capital gains tax, and I'm going to explain that a little bit. Again, I'm not a tax attorney. Talk to your tax attorney or your tax accountant or your CPA about all this stuff, but this is a lot of the questions I get about the capital gains tax. If you have used your home as your primary residence for 2 out of the 5 years preceding the sale, you can take this exclusion on the property capital gains tax. Now, if you're an individual, you can exclude up to $250,000. If you're married filing jointly, you can exclude up to $500,000. Now, actually, in my personal opinion, Congress needs to check this again, because the last time those top numbers were assessed was back in 1997, almost 30 years ago. So those numbers definitely need to go up, because people are selling their homes and they might have to pay a capital gains tax, because the $500,000 threshold, if you're married filing jointly, is not enough. But I'll go into it a little bit more. How you figure that out is whatever you purchased the house for, back whenever that was, and any improvements that you've made on the house, minus the price you sold the house for and all the expenses. So if you net whatever you net from the sale of your house, and then you bought the house, you did improvements, you take that minus this, you get the net. And if it's more than $500,000, if you're married filing jointly, then you would have to pay the difference on capital gains tax. Now, there's certain percentages based on whatever money you make and all that kind of stuff. Again, talk to your tax accountant, but that's the gist of the capital gains tax. Now, like I said, most people married filing jointly don't have to pay that, because they have to do that equation, and it doesn't usually come past $500,000. But that's not to say everybody is in that boat. So if you have any other questions about the capital gains tax, reach out to me, reach out to an attorney, and I'll be happy to help you out. That's my Tuesday tip today. Enjoy this beautiful Tuesday again, although it's cold. I'll take the sunshine. Have a great day. I'll see you next Tuesday. Bye.